I think that our society has been polarized, and I think that this country lacks leadership.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Jake, thanks for having me.
And Happy New Year.
Happy New Year.
As of the recording of this, we'll be in the heat of holiday season. And we want to wish a Happy New Year to all of our listeners and viewers across the globe. Cory, I didn't know if you knew that. We're international.
That's right. Going global.
And today's topic, and the only topic for today, is our 2024 market outlook. Before we go into that, though, Cory, again, to our listeners and subscribers, we want to thank everybody. If you're not already subscribed to Upticks, we would love for you to do that. There's no charge to subscribe. So if you're listening to this on Spotify, Apple iTunes, or watching us on YouTube, please hit that subscribe button. And if you think our content's any good, a thumbs up would be greatly appreciated. I think that helps the algorithms get it to more people. And the whole point of Upticks is to enhance financial literacy. Again, Cory, across the globe. You like that?
Going global. I like it.
So for today, though, we want to talk about a very popular time of year to talk about this, is a 2024 stock market outlook. Now, first, Cory, though, I got to go on my soapbox here a little bit, and I want everyone to dismiss every outlook, every forecast, every prediction you see in the coming days, weeks, months, and years, because it's all garbage, Cory. How about that for a start to our show? And I want to repeat this. No one, and I repeat, no one, Cory, can predict the future. And if no one can predict the future, then no one can predict the future stock market gains but Cory. And, you know, it's a great job. I love what I do. But for some reason, I still get asked this every year. And you get asked this too, don't you, in your client meetings?
I do.
And we've got to give an opinion. But I always want to tell clients, I don't know. And I do. I don't know. Because if I did know, Cory, I don't know what, I'd probably be on my private island just counting my money. And I wouldn't be telling you or our Upticks audience or our clients what to do, because I wouldn't need to.
You wouldn't need any clients.
No. And I'd probably, you know, I don't do this necessarily for the money as much anymore. I mean, obviously I need income to live, but if I knew what was going to happen, I would be the richest guy. I would be on the news constantly with my predictions, and I'd be
gazing into your crystal ball on your
Right.
private island. I can picture it.
Right. And Warren Buffett hasn't even predicted the stock market correctly, and he's probably arguably one of the best investors of all time. He doesn't know. You know what he does, Cory? Pretty simple. He buys companies at a good price that he thinks are run well.
He'd rather do that than try to predict the future, huh?
Yeah, and he buys when things are down, typically, right? That's his whole famous thing, is he buys when there's blood in the streets or whatever. So, again,
Real quick though, Jake, let me
Yeah.
ask you. I mean, what is the rationale? What's the point? Why do we pay attention to these forecasts, and why do the people that publish them feel compelled to do this every year, even when sometimes they are hilariously wrong?
well, let's be clear. I don't pay attention to them.
Okay.
So, but why are they widely
Why do people?
published? Yeah. So why do people? I think it's because just like anything, Cory, people want to predict the future, and they want to know. Well, it's not, and I don't want to equate this to greed. I don't think it has to do with people trying to make a lot of money, Cory. I think it's more they're just concerned about their money, right? And so they want to know ultimately, are they going to be okay, right? Is the market going to do okay? Are my investments going to do okay? I get that. I get that concern, but you have to realize that you can't control that, and you're never going to know. right? And so we go through these fundamentals with our clients, Cory, all the time, and I'll keep going through them. Diversification, knowing what you own, transparency, not using third-party products that are dinging you in high fees. Like, those are the things you can control. And the rest, we've got to hope that the companies that we invest in make good decisions and that the market rewards them. But you can't, I think they predict, Cory, also because it's sexy. It's what grabs people's attention. Like, but don't you see it? I mean, I'm already sick of it this year. Like, I see it all over the place. And when I get the emails, I just hit delete because it's pointless. You can get one email that says the market's going to go up, one email the market's going to go down. Who do you believe? Blah, blah, blah. Nobody knows. Nobody. So, however,
but people keep trying.
However, though, Cory, there are certain macroeconomic indicators that we do pay attention to, and we pay attention to them because it's one thing for us to sit back and say we can't predict the future, but that also doesn't give us right, Cory, to not be informed on what's going on in the economy and in the market, right? So I think ultimately for clients that are watching or listening to this, that's what I want you to understand. That's what you're paying us for, is to make sense of the facts and invest your money accordingly. And so today, Cory, instead of a market outlook, I want to talk about what are we paying attention to the most in 2024. And I'll let you kick us off here. And I want you to talk a little bit about what we're going to be paying attention to when it comes to the Fed, something that we talked about all year. What are we paying attention to, Cory, for our listeners and our audience about the Fed?
Inflation, interest rates, employment. Those are the big three items.
Right. So the Fed is controlling monetary policy and supply. Interest rates have been a very popular subject, rightfully so. They raised rates aggressively to combat inflation and to cool a jobs market. Frankly, they overheated a little bit, which is weird to say, but believe it or not, you don't want it too hot because then it'll just continue to fuel inflation. And so they are trying to juggle, balance, manage, whatever you want to call it, that. So every Fed meeting, you and I pay very close attention to what they're saying and what they're doing. And if we need to adjust accordingly, we do, but we don't trade based on the Fed, but we just look at their indicators so that we make sure that our theme is being carried out. So I want to be very clear here. What the Fed said something, we're not going to go make a trade. I kind of said that, but I meant more that our theme is being carried out. And if we need to adjust our theme, then potentially we'll do that. But we're not going to trade based on the Fed news, because you talked about this in the last episode. That's like a tennis match or ping pong going back and forth. So you don't want to get caught up in that. So we are going to look at what the Fed does, look at what interest rates do, look at what inflation does, and look what employment does. And we will be talking about that a lot, I expect, in 2024. So that is our outlook as it pertains to the Fed. Now, the pundits are saying, Cory, that they think the Fed's going to lower rates. What do you think about that?
Maybe they will, maybe they won't. I mean, I'm being a little facetious about that, but the pundits said the same thing would happen in 2023, and interest rates moved higher, not lower.
Yeah. So good take. They don't know.
Yeah, they're not predicting the future either. They're attempting to, but they can't reach into the future in a way that you and I can't, Jake. No one can. And that obviously is the point.
What's interesting, and that's what's been fascinating to me though, Cory, is that they keep saying the Fed's going to lower rates, and the Fed keeps saying they're not going to lower rates. And they keep saying, so I don't know why there's this disconnect. Now, the Fed also hasn't said they're going to necessarily raise rates, but you're right. So we're going to pay attention to the Fed's comments, what they actually say and what they actually do. We're going to make sure whatever theme we have in the portfolio. And again, the good news is our theme, Cory, is diversification, right? We just want to make sure we own good companies that are going to be able to perform in the current environment. We're not going to go day trade off the Fed, right? If we need to make adjustments, though, we will. So that's what's important here. We're not so passive, Cory, that we're just going to ignore it. That's what I'm getting at here. We're not going to ignore what the Fed does, but we're also not going to day trade based on their comments. Good. What's the second item that we're going to be paying attention to in 2024?
Corporate earnings.
Corporate earnings are always at the top or near the top of my list. They are reported quarterly, typically. And this is basically a signal if a company is meeting beating or underperforming expectations. And this is so weird how the stock market works, Corey. And this is a little bit of education for our audience, is that you can have great or large corporate earnings, Corey, but if you underperform expectations as a CEO, your stock price could get pounded and go down 10%, even though you had great earnings. So this is another thing that's a little fickle out there, right? Is that it's all about meeting or hopefully beating expectations when it comes to that quarterly earnings call that these CEOs have. So a lot of times, Corey, I think they're very conservative in their assumptions with the hope that they can beat expectations. So there's a little bit of a cat and mouse game going on there. However, we do have a portfolio manager in Connor and a research group in Matthew Navickas and Abby Stockman who are combing through those quarterly earnings reports and making sure that our companies that we invest in for our clients fundamentals align with what we expect. And again, we won't hesitate to make a trade if something looks funny there in the earnings reports. But ultimately, Corey, if a company is increasing their earnings, then by definition, they should be worth more money. And hopefully then the stock goes up. Doesn't always work that way, but that's what we're looking at with corporate earnings. You have anything to add there?
Yeah, one thing I just wanted to share, because I just read this in like a macro brief talking about 2024, is actually that earnings estimates are turning higher for 2024 and 2025, which has been surprising to a lot of people because it's almost like there's a stark difference between what people have expected the economy to do and what people are predicting will happen, but also earnings estimates, which oftentimes are driven by guidance that CEOs of companies will provide or CFOs of companies will provide. Earnings estimates are actually surprisingly turning to the upside, which just doesn't seem to coincide with people's predictions about the economy.
Right. And these estimates aren't predictions. They're what the people running the business are saying, hey, this is what we estimate. They'd be like you and me, Corey. This is what we anticipate our revenue being at Falcon Wealth Advisors. And we could probably make a pretty good estimate because we have a really good handle on our business. So these CEOs aren't trying to predict. They're saying, hey, it actually looks pretty good. And so hopefully, Corey, they're right. And we get this tailwind and you see corporate earnings improve higher. And we get typically when that happens, you would love to see a rally in the market.
Yep, exactly.
What's another one? What's our third factor that we're looking at?
The third factor we're looking at is the geopolitical macro factor.
Yeah, so horrible stuff going on here, Corey. So you've got the war with Russia and Ukraine, and then you've got Israel and Gaza. And it's scary, it's disgusting, it's unconscious behavior, it's ego, it's what Eckhart Tolle would call the pain body, and I hate to see it. And when you have these types of geopolitical events, these are wars, you create a lot of uncertainty across the entire globe. Not to mention, we still always are some sort of clash with China. You've got India, which is a fast-growing, emerging population, kind of a fascinating story in India, what's going on. And then all these other countries and governments and rulers and elections. And what's really neat about the way the world works now is that all of us are so interconnected that you really need everybody to do somewhat well. Because if China's doing horribly, well, that stands to drag down potentially America, right? And vice versa. And so you have to take that into consideration, or we do, when we're looking at portfolio construction and making sure that we're adequately diversified, not only to protect our risk, but hopefully to profit from some of these geopolitical influences. So I think today, Corey, that is even more important than it has been in previous years. And I think it's only going to become even more important as the world and society progresses. And we have this interconnected, group of humans all doing business with each other, all buying and selling. I mean, it's so much easier to do business with people in China now than it was 30 years ago. And so you have to be aware of that. And that's something definitely that we pay attention to. And I just want clients to understand that we're looking at that, and that's very important to what we're doing. Do you have anything there?
I think it's good, but I also think that your point about geopolitical events that have occurred and ultimately will occur in the future does reinforce the reason that we're not trying to make predictions about what's going to happen, because there's things that have happened this year and last year that people didn't predict.
Well, that's another good point here, and that's a good place for this to put this in today's show is the unknown unknowns, right? And that's the things that nobody can predict. And frankly, Cory, that's what rattles the market the most. You
Yep.
can think of 9/11, it's horrible. The dot-com bubble, nobody saw that coming. You had the financial crisis. Very few people. I mean, you could argue Michael Burry predicted that, but I don't think he's predicted anything that I've noticed since then. But nobody else was predicting that. You had COVID, right? So again, we've had all kinds of horrible unknown unknowns that have disrupted markets. Typically, it's short term, so it's hopefully not a permanent change in markets. But that's something that you can't. That's again another reason you're diversified. You've got stocks in different sectors and different styles. You've got bonds and different, maturity lengths. And that's the key: is you got to protect against the unknown unknowns. You got to stay nimble and diversified. Good. I'm glad you brought that up. And then for our last big 10,000-pound elephant in the room, Cory, and I know you're a chart guy. I know you got a chart for this, is the mighty U.S. presidential election. Cory, who are you voting for?
I guess it depends on who's running.
I threw one at you there. All right, what's your chart say? You know I don't like charts. What do you got here?
Well, this is talking about the public trust versus basically political elitism. And this chart, what we have here is showing the public trust in government is nearing historic lows. And as you can see, going back to 1958, during the Eisenhower administration, this has trended lower. In terms of the percentage of people who trust the government in Washington, always or most of the time. What is the reason for this, Jake? What do you think when you look at this?
I think that our society has been polarized. And I think that this country lacks leadership. And I think that's what's caused this. I think that we are yearning, we're starving for somebody who can lead this country and get it back on track. Whether you want to talk about national debt, patriotism, whatever, all of it, I think, Cory, most all of it could be improved. And I think it starts with leadership. So I blame this chart on the leaders of America over the last 50 years, because I think they just have been self-serving and they have their own agendas, and they're all speaking, Cory, to one side of the political arena instead of both sides. And I'm not a politician, and I don't really like politics. And maybe that's what hurts. And maybe you have to talk to only the Republicans or only the Democrats to get elected. But I would love to see somebody, Cory, that talked to everybody. And I think that's what great leaders do, is that they are able to communicate see both sides and communicate effectively to both sides. And I think that's what this country needs. That's why I think cost it. Why do you think
that's good.
Why do you think it happened?
A lot of the same reasons. The lack of humility, I think, from the elected officials over the last several decades. Because one thing that stands out when I look at this is there's Democrats and Republicans on there. It clearly does, like, my opinion when I look at that is it actually has less to do with parties and it has more to do with elected officials. And I think that the reality is that there has been, elected officials have ultimately pursued policies that are at odds with what the people that voted them in desire. And like, until that gets rectified, there's an issue. The point that you made about, some things being fractured as far as society goes is that if the people that are elected have their own policies that they're pursuing that are not aligned with the constituents that elected them, that leads to this.
True. You're good. That's a very good point, because that's how you break trust. You don't do what you say you're going to do. So I think what you're getting at is there's a lack of integrity, right?
Yes.
And again,
absolutely.
Well, first off, they're alienating half of the population because they are only speaking to half. And then they're not doing what they say they're going to do. Or maybe they are, and again, people still don't trust them. So this is the point that I want to make on this, though. And I want to be very clear here that the markets have gone up or down during Republicans and Democrats in office. So I don't want our Republican clients to be disappointed if a Democrat wins, and I don't want our Democrat clients to be disappointed if a Republican wins, just based on market. Now, you can be disappointed, obviously, but I'm just talking about your portfolio and your investments. What I want to avoid, Cory, is somebody winning the election that a client disagrees with, and they call us up and say, I want to get out of the stock market. I don't like this politician. Because ultimately, the free markets hopefully will adapt and pivot, and they'll find ways to make money based on the rules. And so the worst thing we could have as it comes to the election is a contested election or not a clear winner, which would again be an unknown and create more volatility and more uncertainty. So all I want to see is a winner, whoever it is. It's clear, and that we can find out what their agenda is, Cory, whatever it is, and then we move forward and we adjust and adapt based on that. So again, regardless of your political affiliation, you want somebody that has a stance so that we can pivot from an investment standpoint and make sure that we've got you invested in a sector or an area that stands to do well based on policy. Unfortunately, that's just the way it has to be. You can't have anarchy. You can't have no rules. So there's got to be some policy in there, and you just want to be able to align with that policy. Because if you resist it as an investor, you're not doing yourself any good. Does that make sense?
It does. And I think the last two presidential elections, Jake, are perfect examples of what you're talking about. Because I remember vividly all of the headlines and the narrative that if Donald Trump was elected president in 2016, that the world was going to fall apart, stock market was going to crater, and that would be it. And obviously that's not what happened. But the same thing held true actually in 2020. The predictions were that if President Biden won the White House and the Democrats controlled Congress, that the market would crash and so on and so forth. And the market was up over 25% in 2021, the first year of President Biden's election. The point there being, we have two distinct examples from the last two elections on both sides, both political parties. We just have lived through it, and we're going to live through it again over the course of the next year, but keep that in mind.
That's good. Yeah, this too shall pass. Very good, Cory. And again, thank you all for tuning in. We got a fun topic here, a curveball, if you will. You like that baseball analogy, Cory?
Nice.
What's the baseball topic you wanted to bring up as we wrap up today's show?
Yeah, so Shohei Ohtani on the Angels signed a contract with the Dodgers for $700 million. What is really fascinating to me, and I just wanted to get your take on this, Jake, his contract is that he's going to take home just $2 million per year for the next 10 years, and then $680 million of his contract is deferred until 2034 to 2043. So by the time he gets his final paycheck from the Dodgers, who he signed with, he'll be 49. But my question for you, Jake, is if you were a sports agent and Shohei Ohtani was your client, would you advise someone like that to take a contract where they're deferring that much of it?
Well, I don't know as much about baseball rules as you do. I think I read, Cory, that he's doing this so that the Dodgers have more cash.
Yeah, the luxury tax.
To build up their luxury tax. What's that mean?
Basically, it's aligned with the point that you're making, but the fact that he's collecting what he's going to doesn't create as much of a luxury tax for the organization, so they can ultimately put other players around him to try to win.
Right. So I think he just wants to win championships, and I think that's a lot to defer. He's probably fine, though.
Well, he's making $45 million a year in endorsements, is what I read. So he is doing okay there. But the baseball contract, that fascinated me that he's only going to take $2 million a year for the next 10 years.
That's a team player. I like it. Now they're going to be.
You think the Dodgers will try to sell the team before it's time to start really paying him in 2034?
Yeah, I don't know. That's going to be another issue they're going to have to deal with. But, LA and New York, they've got deep pockets. Those guys, I don't feel bad for them. I don't feel bad for them paying him.
No, I don't feel bad for him either. I'm wondering if that's part of their strategy. Let's sell the team before this obligation hits. Who knows?
Yeah, maybe. And I think he's just trying to say, hey, I'm only going to take a couple million a year. You go get some more big-time players to play with me. So good for him, I guess. Where does his commercials? I don't ever see him on anything.
I'm not sure.
You think is he from Japan?
Mm-hmm.
Maybe it's back in Japan. I don't know.
Yeah, and probably on the way. I mean, it's interesting that he's going from the Angels to the Dodgers, both teams in the LA area.
It's all about the money. Wish he would have went to the Royals.
Yeah. Yes, I think that would have been nice.
So
It would have been fun to watch him for the next 10 years. It will be
Yeah.
anyway, but
Yeah,
it would
we'll
have
have
been fun
to-
watch him on the Royals.
well, yeah, we'll have to try. It's just the National League, American League might be harder to catch them. So, but anyways, all right, well, good. Well, thank you for bringing it up, and thank you all for tuning in. Please like and share our content. Again, that's the best way that other people get to view it. And we hope all of you have a great new year. We hope you have a great 2024. Hopefully, this market outlook provided you some insight. Just remember, no one can predict the future. Yes, we're going to be paying attention to some major factors. We're going to keep our clients diversified. And of course, we're always here. If you have any questions or need anything, simply email us at service@falconwealthadvisors.com. And our entire team at Falcon Wealth Advisors is here for our clients. And again, Cory, Happy New Year.
Happy New Year.
Happy New Year to everyone. And thank you again. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.